Imagine this. The next time you buy groceries, fill up your car, or even pay your rent, you're, in some way, connected to a single, enormous, almost invisible corporation. Its name is BlackRock, and its influence stretches across nearly every aspect of our lives. But what if, one day, it all came crashing down?
What is BlackRock? An empire hidden in plain sight.
BlackRock, Inc. isn't just another Wall Street investment firm. Founded in 1988 by Larry Fink and a small team, it has grown to control over $10 trillion in assets, a sum larger than the entire GDP of countries like Germany, Japan, and the United Kingdom combined. But what does this vast empire actually do? BlackRock manages money for pension funds, governments, endowments, and individual investors all over the globe. Its investments stretch across every sector imaginable: energy, tech, healthcare, real estate, and even sovereign bonds. Now, imagine a company so embedded in financial networks that it has become almost a shadow system, holding pieces of nearly everything. Through its investment in exchange-traded funds, ETFs like iShares, BlackRock connects millions of individuals to shares in thousands of companies. That's right. If you own shares in an ETF, chances are you're indirectly invested in companies handpicked by BlackRock. In many ways, this single firm is a silent partner in the modern economy.
How BlackRock's influence touches almost everything.
Think about it. BlackRock's reach is so vast that an ordinary person can hardly escape its presence. Take a closer look at some of the biggest corporations: Apple, Google, Microsoft, Amazon, ExxonMobil, and even Coca-Cola. BlackRock holds significant shares in each of these companies, often among the top investors. This means that BlackRock has a say, albeit often quietly, in the management and strategies of these titans of industry. From the phone you're holding to the food you're eating, to the car you're driving, BlackRock has a hand in it. Let's dive a bit deeper. Through its flagship ETFs, BlackRock has investments spread across thousands of companies worldwide, including small startups, established giants, and everything in between. Even local real estate developments may have received funding that, at some level, is connected to BlackRock's financial network. In effect, this means that nearly every product, service, or asset you touch is, in some way, backed by BlackRock's wealth.
BlackRock's influence on governments and policies.
Now, BlackRock's reach doesn't stop with companies. It has found its way into government halls and global economic strategies. One of BlackRock's most powerful tools is a software system called Aladdin Asset, Liability, Debt, and Derivative Investment Network. Aladdin isn't just a fancy name. It's a financial intelligence system that manages risks and tracks portfolios for over $20 trillion worth of assets worldwide. This software is so reliable that it's used not only by private corporations but also by government agencies and central banks to predict, analyze, and manage risks in their economies. During the 2008 financial crisis, BlackRock was called upon to manage toxic assets for the US government, a role usually reserved for regulatory bodies. Fast forward to the COVID-19 pandemic, and BlackRock's involvement grew even deeper. It was tasked with helping manage the Federal Reserve's pandemic recovery plan. With this level of influence, BlackRock's presence has become a safety net and, at times, a puppet master in economic policy. This has earned it the label, the fourth branch of government, a title that carries weight but also sparks concerns about conflicts of interest.
What would happen if BlackRock went bankrupt?
Let's venture into a scenario that seems almost unthinkable. What if BlackRock went bankrupt? The fall of a financial giant like BlackRock would send shockwaves through global markets. The first impact would be immediate. Thousands of ETFs and investments tied to BlackRock would lose their backing, causing widespread panic and a sell-off in the stock markets. As stock prices plummeted, companies reliant on BlackRock's investments might face funding shortages. Entire national economies would feel the blow. Governments that rely on BlackRock's steady returns for pensions and public investments would lose billions. sparking economic crises in countries from the United States to Europe and Asia. Such a crash wouldn't just affect a single region, it would be a worldwide economic earthquake with immediate repercussions on every industry, from tech to energy to healthcare.
Global economic chaos. The domino effect.
With BlackRock's collapse, the domino effect would begin. Companies and governments dependent on BlackRock's capital flow would scramble to find alternative funding, a process that's neither quick nor easy. For many companies, this could mean layoffs, stalled projects, and, in worst cases, bankruptcy. Real estate markets would likely crash, as BlackRock holds massive portfolios in commercial and residential properties. With fewer investors to stabilize property values, prices would plummet, leaving property owners in debt and potential buyers afraid to invest. Meanwhile, global debt markets, where BlackRock also has a massive stake, would seize up. Governments would face sudden pressure to repay or restructure debt, adding stress to national budgets and causing ripple effects in public services and infrastructure spending. The cost of borrowing would rise worldwide, meaning everything from business loans to home mortgages would become significantly more expensive, creating a global financial bottleneck.
The impact on everyday life.
For everyday people, this collapse would turn life upside down. First, we'd see widespread job losses as companies downsize to adapt to funding shortfalls. Essential services like healthcare and energy, which rely heavily on stable funding, might experience disruptions, resulting in higher costs and reduced availability. The impact would extend into small but significant details of daily life. Grocery prices could rise, bank interest rates could spike, and even pensions and savings could take hits as investment values decline. People's retirement funds, often managed through ETFs and other investments tied to BlackRock, would face sudden and severe devaluation, leaving many facing the loss of lifelong savings. For those with mortgages or loans, monthly payments could increase, making homeownership unaffordable for millions. In essence, BlackRock's bankruptcy would leave an economic vacuum so deep that everyday life would be disrupted in ways we can hardly imagine today. So, next time you buy a product or pay for a service, take a moment to consider how interconnected we truly are. BlackRock's influence, while often unnoticed, is woven into the fabric of our daily lives. But remember, even giants can fall. What would our world look like in the aftermath? Could we rise above the chaos, or would we be forever changed? If you enjoyed this journey through ideas, make sure to check out more thought-provoking videos right here on Crazy Theories. Hit that like button, share your thoughts, and don't forget to subscribe.